Today's video, we are going to be asking the question, can you afford this house? Now, we did one of these videos the other week, but shout out to our commenter of the week, GT443. He had asked me to do one for Las Vegas. So if you were watching this video and you want me to do your specific town or a place that you're looking to relocate to, comment below, drop that city, and let me know where you want me to run some numbers, and we'll go ahead and do that. Let's hop right into the video, and we're going to head over to our trusty Zillow.com, and we're just going to type in Las Vegas, Nevada. So the median price in Las Vegas is slightly over 400,000. So let's just do a quick range of 400 to 500,000. Just a basic search, 3-bedroom, 2-bath, and we've got 39 listings. So if you're thinking of the Las Vegas market, you see there's not a lot of inventory out there. I think the general number right now is we're under about 1 month worth of inventory. So what does that mean to you as the buyer? It's a seller's market. So there's not a lot of inventory. Sellers are kind of the name of the game right now here. So if you're a buyer, you got to move quick if you're looking to purchase. Let's look at this house for $500,000 on Mosaic Sunrise. Pretty cool looking property here. Zestimate $514,000. Awesome. And just know the Zestimate's not always 100% accurate. It's a good idea, good ballpark as to maybe property values, but don't take it for gospel. A lot of people think that that's what the actual value of the home is. Let's run all the way down to our calculator here. And a $500,000 house, I'm just going to estimate that we are going to put 5% down. This is going to be a primary occupant home for a specific buyer out there. Now, if you're a first-time home buyer, don't forget you can put as little as 3% down and qualify for a mortgage. Interest rates today probably going to be around 5.375%. Interest rates are going up, people. So if you are thinking of buying, do it sooner than later. One of the cool programs that we actually offer here at Loan Depot is called our Lock and Shop program. So typically, if you are shopping for a home, your lender has to have an accepted offer on a house. So they have to have the contract in order to lock your loan. Now, if you rewind the tape for the last 30 days, you will know that interest rates have gone up almost 1%. So that obviously affects your buying power. That obviously affects what you qualify for. But with our Lock and Shop program, if we were to qualify you for today, we can lock you in at today's interest rates and lock you for 90 days so you can shop with the peace of mind knowing that your interest rate's not going to go up and neither is your payment. But let's hop back into the rest of the numbers here. Our mortgage insurance, they will have mortgage insurance on this property because you're putting less than 20% down. This tax rate is a little high, so we can drop that and we'll ballpark it to about $3,700 a year. And you can see here on the website, they give us a rough idea that taxes are about $3,300. Homeowners insurance, about $2,100 a year. That might be a tad high, but we can run with that. Let's run with that number. And there is a $49 a month HOA fee. So if you are looking to buy a home in the Las Vegas area, just know that HOAs are pretty common out here. Most of the communities are going to have HOAs. Now, there's good and bad parts to HOAs. If you've got a bunch of cars that you need to park outside, or you've got trailers or fifth wheels or any of that good stuff, HOAs might not like you so much because they like to keep the community clean and looking uniform. So you may have to look for something that does not have an HOA. So if you're not familiar with that, definitely have that conversation with your real estate agent. And if you need a good realtor, don't forget we can always connect you with some of our great partners that we work with in order to help you with your search. So back to our scenario here with this $500,000 home with a 5% down payment. You're looking at a total monthly estimated payment of about $3,400 a month. Now, when we look at qualifying someone for this mortgage, we are going to take their new payment of $3,497. And if you've been watching my channel before, the acronym that we like to use is PITI. This tells us that we are including your principal, your interest, your property taxes, and your homeowner's insurance. And for the sake of this specific property, we're also going to be factoring in the HOA, because the HOA you still have to pay for and account that for your DTI. Now, if someone was looking to purchase this home, we can reverse engineer the numbers to figure out what you would need to earn in order to qualify for this mortgage. Now, remember, when we qualify someone, we're looking at the new potential payment of the house. We're also going to be looking at, if you have a car loan, how much is that car payment? Let's just assume for this specific person, it's $500 a month. And we're also going to be looking at your credit cards. Now, remember, for the credit cards, we only look at the minimum payment. I have a lot of clients that will call and we go over numbers over the phone, and they always like to refer to the total amount, that the balance that is owed on the card. Now, does that affect your credit score? To an extent, yes. But remember, as far as lending goes and for us to qualify you, all we're going to look at is just the minimum payment on those credit cards. So let's assume with our buyer, their monthly minimum payments, maybe they've got 3 credit cards and $50 each. So let's call that $150 a month on credit cards. Student loans, we also have to take that into account. Let's say they're paying $100 a month back to their student loans and no other bills whatsoever. So let's look at our grand total of debt that's being serviced for this loan. So our total debt that's being serviced every month is $4,247. So if we're looking at conventional financing, ideally you want to keep your debt to income ratio under 43 to 45%. That's kind of the general rule of thumb. There are times maybe you can push the issue a little more, but generally speaking, for what we're trying to accomplish, let's take a look and see what your gross monthly income needs to be. What we're going to do is we are going to divide by 0.45. That will then give us a gross monthly income of $94,3778. Remember, in mortgage lending, we always look at the gross income. If you're self-employed, we do look at the net. But if you're an employee, W-2, we're going to look at the gross. But either way, you need to be earning $9,400 a month to qualify for this specific house. If your situation looks similar to this as far as car loans, credit cards, student loans, obviously if you have less debt, there's less income that you're going to need to qualify for this mortgage payment, and vice versa. If you have more debt, you'll have to earn more. Now, if you're having a tough time qualifying because of the way that interest rates have been moving lately, they've been super volatile, you can look at, like I said, our lock and shop program, or you also can look at buying your interest rate down. This is one thing that not many loan officers talk about. So if you are looking at ways to get more buying power because you are limited maybe on what you're looking to purchase, you can pay what we call points to buy your interest rate down, get you a little more buying power, and get you into your home. Or you could also see if maybe you have a co-signer that can help you qualify for the mortgage if you're tight on your income. Make sure to check out this next video to learn how to get your mortgage right to help you buy your first home or your first rental property. And remember, if you are thinking about purchasing and you need help with a pre-approval, that's what I'm here for. Hit the description for links to more information. And if you want me to run numbers on a specific deal that you're thinking about buying, make sure to send me an email and I'd be happy to shoot that next video for you, and I'll see you on the next one.